The concerns around an AI bubble are getting loud, and one could definitely see it going either way. Here are two questions that we're asking that hopefully helps inform the way you guys are thinking about this. Everybody knows that AI infrastructure spending is through the roof. The question to ask is, how is demand and monetization? We think demand is strong and that there's plenty of money to be made from AI, from chips to devices to apps. From our research, every new data center that comes online goes into immediate use, and there's plenty of new product innovation coming to market in AI. Let's use a quick analogy. If AI was like the invention of the car, then data centers are like gas stations. If that was the case, then every new gas station built immediately is getting customers with a line down the block, and that makes it easy to justify investment in a lot of new gas stations. Despite strong demand and innovation, there's definitely challenges here. The first is price. It's a shame these data centers are so damn expensive because that makes this so much more risky. There's also power. They're very power intensive to the point where Project Stargate is building its own natural gas facilities adjacent to the data centers. And lastly, depreciation. Computers, GPUs, they depreciate quickly, unlike cable lines or railroads from past infrastructure builds. The second thing we're asking is, what specifically could trigger an offset to the AI rally? The first is an economic downturn. Wall Street has basically given big tech the green light when it comes to investing in AI because they have so much cash on hand and other very healthy revenue streams. If there's an economic downturn and some of that revenue dries up and those earnings fall, you're going to immediately start to see investments in AI come into question and these stocks get hit. The second is a technological advancement that shortcuts the need for so much infrastructure and power. If these companies get caught overspending and someone comes along with a new technology that negates the need for that infrastructure, it's really going to hit those stocks. There's also over-concentration. There's just a couple of players in this space at this point, and they're increasingly intertwined. If an unforeseen event happens to one of them, it could trigger a broader sell-off. And lastly, legal intervention. We're starting to see things like copyright suits get brought to the surface, not necessarily going to stop AI, but it might hit the margins and dampen enthusiasm. Our unofficial advice is to zoom out, think through multiple scenarios, and do the research to best position yourself for those that you think are most likely. Thanks, guys. Let us know what you think when it comes to AI and the rally here. Be good.